Hey traders, welcome to the Top Tier Outlook. Happy Sunday evening, everybody. We're kicking off the session here as the Asian session is opening. We have basically Auckland, Sydney, Tokyo, Hong Kong, and then Singapore. So these 5 different financial centers are going to be opening up over the next, call it about 2 hours, 2 to 3 hours. And we're going to see the very first look at the way in which we're responding to Friday sell-off. Is there a buy? Is there a bid as we kick off the session? And, these are not necessarily moves we're going to see echoed into Europe, the UK, or even the US for that matter. But we're getting a first look. And, we can see a little bit. I'm going to open up this daily time frame. You can see we're opening up above the previous session close. Previous session close was 40,550. I'm watching this one in particular because if we take a look at the sectors here we go. If we're taking a look at the sectors from last week. So let's take a look at a 5-day normalized performance. It's going to look awful busy, but this is all you need to look at. Along the right side, take a look at the order from top to bottom of what sectors were outperforming the last 5 days. So basically last week, regional banks, cue the Russell, right? ITB, your home builders, your home construction, that's going to be anticipation of lower mortgage rates because there is a nearly 95% at the moment expectation that we're going to see a rate cut in September. All right, then you have OIH and XLE. Now, crude has been a little wobbly, but it had an unbelievable run through 80, still above 80 at the moment. No, actually, crude oil is trading at 78.60. So we'll have to keep a really close eye on OIH and XLE into tomorrow. Now, oil services and the energy sector benefit in terms of influence. Let's say influence the Dow more so than the Russell, Nas, S&P. So we see those up there. Financials, number one weighted sector in the Dow, up near the top. You can see here staples, right? You have staples here. Staples are that defensive corner. That's your Procter & Gamble, your Costco, your Walmart, your Coke, your Pepsi. And then we see here agribusiness. All right, we'll see what Moo can do, but that's the way last week ended. Now, even more so, take a peek at consumer discretionary, metals and mining, technology, and semiconductors. So why was the S&P, why was the NASDAQ lower? Because the main cylinders within it, those 4 major sectors, were weak as you can see the week ended. So that was last week. It doesn't mean that's what we're going to see into this week, but this is the structure. Month to date, you can see a lot of the same layout, a lot of the same names at the top of this list month to date, meaning 21 days into July. This is where the outperformance has been. This is why we see so much strength in the Dow and in the Russell. So as much as, say, the NASDAQ and the S&P just had an unbelievably bullish June, if we cling to those expectations without the support of the sectors as we go into July, we're not going to be focusing on the trends that have the best probability of following through. So keep that in mind as we're going through the remainder of July and where the attention seems to be. Of course, attention can flip in a heartbeat. And just because the Dow is moving lower doesn't mean the S&P and the Nas have to move higher. Or in the case of the Dow and Russell moving higher, it doesn't mean the S&P and NASDAQ have to move lower. What it does say is we're not seeing broad participation across the sectors. Therefore, we're not seeing broad participation or directional bias. We're not seeing them all moving together, basically. And that's what we've got as we're kicking off the session. All right, so Dow, let's go take a look at the S&P. You can see there above the previous session close. So we're starting off not with a gap down after Friday's session. So far, not with a bunch of weakness to kick off the Asian session. In fact, there's a slight gap up, right, if anything. Now let's go take a look at that Russell. Remember, KRE is a big reason for the Russell's movement to the upside. Take a look at that KRE sitting above 2,200, but the KRE is below the previous session close, not by a bunch, but it is below. So that's something to note. So when given the chance to either buy above that close on Friday or buy below, you can see we're marginally below that level. All right, what about things like crude oil? I mentioned crude's a little weak on the Asian Open. Yeah, a little heavy. We can see the sell-off from Friday. I forgot we broke 80. So you take a look here. We broke 80. We're down at 78. By the way, this is absolutely going to be something I will watch for XLE and OIH into the coming week, because if crude persists lower, now look, one down or two down days in crude are not going to undo the strength in those sectors any more than just a handful of up days in crude oil led those higher. It's going to be the accumulation of 3, 4, 5 sessions and continuity that creates that follow through in the energy stocks. They're not going to be that twitchy. I wouldn't expect them to be super strong, but they should not be that twitchy. Take a look at the XLE. It moved down with crude on Friday, so we'll see. But no red candles. You're not even a yellow on XLE. Let's go take a look at bonds here on the open. So sitting in an inside candle. Basically, an inside candle is what? It's a range that right now is trading within the inside of the high-low of Friday. So inside candle, that doesn't tell us much. There's not a lot of bullishness. There's not a lot of bearishness. We're just kind of sitting, but sitting above the previous session close. And then finally to gold, take a peek, and just above the previous session close at 2402. All right, so that is what we've got here to kick off the Asian session. Now, a couple other things to think about. So we have this 6 p.m. to 8 p.m. wind up of the brand new trading week. At 2 a.m. Eastern, you've got your European session coming in. At 2 a.m. At 3 a.m., you've got the London session coming in. Then around 7, we're going to see that U.S. is going to have a little bit more influence on what's happening. And it'll be around 7 a.m. We'll see whether or not these levels were held or, whatever happened overnight. And that's where we sit at the moment in terms of, here we go. That's where we sit so far on this early look. But I'll tell you, we're not seeing any major panic. We're not seeing any major movement from Friday's sell-off. I think that's a lot of times what traders fear. Rog, if there's a lot of weakness the session before or Friday going into Sunday or Monday, are we going to see this dramatic move? Are we going to gap down on the open? Clearly not. And that's not usually the case. But right now, we're not seeing that kind of movement at the moment. All right. With that being said, let's go ahead and jump into the questions. As always, hope everyone's having a good evening. Let's get those questions in. Our show runs every Sunday, by the way, from 6 to 6:20 Eastern. So here we go. Curious about your thoughts on HG and natty gas. All right, let's start with copper. Copper had an amazing June, right? Bullish, let's call it just bullish. And a really pretty darn bullish June. I should say May. Sorry, May. June got a little wobbly, and then July has pretty much been choppy bearish. So you'll notice that miners in metals, XME, things like Freeport-McMoRan and Alcoa, I'll be a little hesitant to be too bullish there as long as there's a lot of heaviness on copper. So not catching a bid, not, as long as these red candles are dominating, my expectation is going to be for lower lows and lower highs. My expectation is that resistance is more likely to hold and support is more likely to break. And this will only become more so if we turn into a downtrend, which we're not quite yet. It's a lot of bearish chop though. And if we break basically 4.100, that would be basically taking out the equator, as I like to call it, those white dots. We would be then in the bearish hemisphere of copper. We're not there yet, but certainly a lot of bearish chop. As far as natty goes, natty doesn't look anything like crude, does it? So when you take a look at natty, natty was the one that had a great June and then has been rolling over and is in a downtrend in July. So if you take a look at natty gas, this one's a way easier strategy. If you take a look on the 12th, we got the first heads up that we might be turning into a downtrend. And on the 15th, we turned into a downtrend. So as long as the candles are red, my preference is going to be for a red candle traveling higher into the gold zone and that triggering either the short sell in NG futures or long calls long puts on UNG or Boyle, whatever you like to look at. But the red candles will tell me that directionally I should be bearish, and the gold zone tells me where, right? So red candles bearish, gold zones are that dynamic resistance where I want to either trigger a, say, limit sell in natty to get me short, or it triggers my long put entry. So I would remain bearish on NG. All right. So it's had a tough July. No question about it. So yeah, as far as gold goes, Anthony, not much. Let's see if it's done anything in the last few minutes. Yeah, gold, not much in terms of what I'm looking at. So all my cards on the table on Friday in the Sector Secrets Mastery, we got long DIA calls and we got long gold calls because both of them sunk into their daily price movement range. And we saw a little bit of weakness into the last hour of day, a little bit more weakness into the last, say, 20 minutes or so. But we did pull the trigger on the long calls in GLD and in DIA. So those are two positions I hold going into tomorrow. All right. Next up is, and by the way, for those of you wondering, Rog, how does that work when you send that alert? So some of our traders on a Friday evening or a Friday afternoon are not necessarily going to be in the room. You know, folks start to wind down the week. But the cool thing is when these setups occur, of course, you know, we're going to send that alert out in the room, but that alert then populates on this thing on the phone. And so before the trade is triggered, and I emphasize that because what we always try to do is have a price trigger from which we want to buy the call or buy the put or get in the futures contract, right? So we want to know that beforehand. What else do we know beforehand? What is our risk on that entry? What else do we know beforehand? That I want to know where the target is as well. So we put that whole blueprint out as an alert so traders have the time to see, oh, we're looking to buy the DIA calls or GLD calls. And I'm not going to do it. I'm not going to buy the calls in the alert, you know, whatever the strike and expiration is, until a certain price is reached. So that to me is what an alert is, right? If I was thinking about a GPS analogy, what does your GPS do? You know, I want to go to this place and in a quarter mile, turn left. In a mile, turn right, right? I want that kind of ability for myself and for the members of the mastery to say, hey, this is what we're going to do in a quarter mile, right? So that's always the plan. And that's what we did on Friday. YM has had a better run up. Does that mean the drop could be higher too? Not necessarily. It dropped quite a bit already. When a market does go parabolic, what I would assume is that it's going to have volatility in both directions. So to your point, if we have a exaggerated move to the upside, a parabolic move to the upside, then yes, I would at least be ready for higher volatility in either direction. So yes, to your point, it could be a higher volatility pullback, or it just could be higher volatility acceleration. So I'm just going to be ready for it. I don't know if that's really what's going to happen, but larger candles or a higher speed at which each session is going to higher highs or lower lows, if it starts to exceed the typical volatility, now we know, okay, Rog, if we're usually traveling within the gold and gray zones, which account for 68% probability of the range, and we go outside of that like we did on the 16th, it doesn't mean I'm bullish or bearish. It just means I should be ready for higher volatility because we've kind of flipped the switch and things have gone, if you want to look at it mathematically, a little haywire, right? And that's what we look at. We look at the math of historical volatility. What is in the 68% probability and what is in that tinier 32%. So that's something else we're looking at there. Okay, next up is what are my thoughts on NVDA and AMD? NVDA has red candles. I'm going to be very hesitant to be bullish in NVDA, especially when there are other names within semiconductors that may look a little bit better. So I want to find something that doesn't have red candles. SMH has been very heavy, right? So I'm going to leave a lot of those tech names within the semiconductor sector, NVIDIA, AMD, anything within that group that has the red candles, I can't buy yet. I can't buy yet. Question is tech still in buy the dip mode? The last dip I bought, green eggs and ham, in tech, which would have been QQQ and XLK, was on the last trading day of June, the last trading day of the quarter. We haven't entered tech as a swing trade since. So I'm not really looking at buy the dip in tech, maybe financials, very much on a case-by-case basis, but we've been much more focused on Russell, regional banks, Dow, things of that nature. All right. And then as far as NASDAQ or QQQ goes, yeah, NASDAQ, again, as long as I see those 4 cylinders within this motor, tech, communications, consumer discretionary, semiconductors, as heavy as they are, NAS is red, I'm going to leave it alone. So are we in buy the dip mode? Not in trends where on the daily time frame we have printed red candles. No. All right, next up is PLTR. Green candles, just waiting on a dip. Yeah, Billy. So when I see something like this, it could be a retracement. It could be the green dots. It could be a mean reversion in the green, yellow, red zone. But I need a pullback. And a pullback's going to look, Billy, if you're wondering what it's going to look like, it's going to look like the 24th of June. Maybe not that much of a pullback, but we sink down into that range. That's what I'm waiting for, something like that. All right. Who are the people that buy and sell the CME FedWatch futures? Traders. I mean, that's the answer. Traders. Just like anyone who would trade gold, that's just their focus. Anyone who trades pork bellies, anyone who trades, wheat, it's just their market. So just traders. Next up is Apple. Would I add? Well, I don't add to anything. Is there a setup, Dave, is always the question. And right now I do not have a setup on Apple that I'm willing to take as long as the NAS is as heavy as it is. But to your point, this is one of the better looking stocks within XLK. It's one of the better looking stocks within the NASDAQ. So I would like to, but if there's alignment, I know I'm going to get better follow through. Now, what does that mean? Alignment means that from the top of the food chain down, index, sector, stock. I'd like to see the index move higher. I'd like to see the XLK move higher. And then I'd like to see Apple do that as well. But Apple would be on the list. And in a world of NASDAQ stocks that have really taken the pullback pretty hard, look at the red candle in Microsoft. We already saw the red candles in NVIDIA. Yeah, Apple is a standout in that regard. All right. Okay, very cool. And let's see. Questions? I think we're caught up. But no, I do not add as a general rule. As far as Bitcoin goes, look, I'm not an avid, active Bitcoin trader. I'm a hodler. I'm diamond hands since 2016. That being said, in terms of what Bitcoin's doing, I don't want to be a buyer in the red. So you might say, okay, Rob, red candles, what would you do? Red meets the gold. That's a short on the 18th of June. Red meets the gold. It's a short on the 24th of June. Red meets the gold. Short on July 3. You could probably say the same thing on July 5, but then nothing really triggers again till the 8th. All right. Neutral candles. I could think of the long or the short side, but once we go green like we did on the 19th, green meets the gray. When the green candle sinks down to that gray zone, that's a long position. So the most recent position for Bitcoin itself, and that's going to track the BITO and a lot of those other stocks, CoinMara, etc. I would start with Bitcoin, just like I would start with crude oil for oil stocks, just like I would start with gold for gold miners, right? I'm going to start with Bitcoin for all those related stocks. And on Friday, and on the 19th, you can see here, we sunk down in Bitcoin futures into the gray zone. That is green plus gray. That's your color-coded paint by numbers, trade by numbers. And so that was the last trigger on the candles and those price movement ranges, volatility-based support and resistance. All right. Are the green, red, yellow lines part of the grab? ESP, they're part of the top tier, which is the next level of grab. So if you've got grab, you'll see green, red, and blue. Top tier, different formula, different candle colors, different calculation, but basically trying to identify the same thing. What are bullish, bearish, neutral candles? And where is that mean reversion zone? So if you've got the classic grab, great. If you've got the upgraded top tier, that's what I've got running on my charts. All right. As always, gang, thank you so much for being here for Top Tier Outlook. I appreciate the time as always. Have a great remainder of your weekend. And I'll see you tomorrow morning, bright and early, for Charts and Coffee at 9 a.m. Eastern, 30 minutes before the bell. All right. Until then, gang, be good to each other.